We are back with a series with Allison talking about creating your own finance company if you're a business owner. It's a strategy that the wealthy used, and so I really had to get Allison on this series to break it down from a CPA's perspective. Let's get into it. This episode is brought to you by Rife Martin CPA, where they help you make money by thinking with the end in mind. What's going on, Allison?
You know, here we are in the middle of summer thinking maybe the end of summer. Depends on what Texas considers the end of summer, but it's hot. Whew, Nelly, it's hot. And I think what better of a hot topic than building an in-house finance company? So you picked a good one as usual.
Thank you. Yeah, when I picked the topic, what made me think of it is like, you remember like GE Financial? I remember seeing that and I was going, why does GE have a finance arm, right? I thought that like, I don't know, over a decade ago. So then I was going back through it and I was researching the topic. I was going, oh, this is why they create a finance arm, right? Because once you got money and assets, that you have on your balance sheet, then you can like put a line of credit in and use it two ways, right? So great. It was like, makes complete sense.
And it's a great, with the GE idea too, just think of the great way to generate more revenue too.
Mm-hmm.
Because obviously if you say you buy a GE appliance, well, maybe you have to take out a line of credit for it or like a loan. You can go through GE for it. So
Yeah,
great way to bring revenue.
absolutely. So let's get into it. In plain English, what does it actually mean when a business owner sets up their own separate finance company, and how is that different from, them just going to get a loan from the bank?
Kind of like the same thing. First off, from the business owner's perspective, you're creating another entity where think of it like an installment loan. What if I sell my business to you on credit? That's effectively how it's all working. Rather than going to the loan, I have control over who the customers are that I'm going to bring in. I'm going to make sure I understand that they're credit worthy, that they can actually fulfill the bargain. Plus, I get to bring in the interest income and, use it to help provide better products and services to my customers.
Got it. And then if a guy's like running a solid business, say an equipment dealership or a trade company or a ranch, what's the incentive to do this, and like where does the actual extra profit come from?
Well, again, if I'm loaning you the money, if I'm basically selling you the product on credit, I get to generate the interest. Also too, I can add additional products and services like warranties if I'm doing like, a dealership, or equipment or a ranch operation. And I can see lots of reasons to do it because again, like I said, you get to control the customers that you bring on board. You get to control, make sure that they're credit worthy. And again, you have more opportunity to make it a one-stop shop so that I don't want to go anywhere else but here to work with you about whatever service or product that I'm trying to sell you.
And I know there's different rules and licenses around if you lend to customers versus like if you're just lending to your own internal operation. So let's speak to the specific. Like if you just create a finance company to finance your businesses, so separate out the customers because that's a whole different compliance. So if you say, oh, I got some money and I have to buy tractors and land and equipment, my business have to buy that and they may finance it. Why does it make sense to just finance it from my finance company?
Well, I guess I'm just thinking again, as a separate entity. It can certainly help with tax benefits is what I can see too. Again, because I'm picking up one entity's picking up the income, one's getting the expense legitimately, obviously, because we've got a note, we've got a business need for it. It's a great way to help reduce taxes or manage taxes more efficiently.
Yeah, no, I like it. I like it. And that's look, you walk right into. I was like tax benefits. Yes,
Yeah,
tax
exactly,
benefits.
exactly. So, and I think too, and I say this as I'm not an attorney, but it also helps spread the liability,
Yeah.
right? So I
Hmm.
think that to me would be another reason to do it.
Yeah, yeah. And as a wealth manager, I like the idea because you have business owners that are going. They'll say, Philip, I need to set up a 401k or put my money into an IRA, or I need to save my money for retirement. And I'm like, cool, like, but you're a business owner. What does that mean? You operate by different rules than somebody that doesn't own a business. Like, what do you mean? Like, if you lock your money up in a 401k and an IRA, you can't borrow against it to run your own financial operation. Why is that beneficial? Well, let me explain to you
Yeah.
how rich people set up family offices to finance their investments and businesses and operations, and they could keep their money earning money while using a line of credit to finance things and run the arbitrage like a bank. And they're like, I don't know what you just said, but that sounds super financially attractive.
Especially when you say arbitrage and you got to figure out how to say it.
Arbitrage, arbitrage.
Also elongate the trage part. So,
I can do my what's that do? Barry White voice.
yes, exactly.
Arbitrage.
Oh, oh my God.
All
I
right.
think that would be a wonderful way to woo customers. So,
Well, let everybody know how they can reach you if they're interested in learning arbitrage.
gosh, I wish I could go that low with my voice. So, but you can reach me at my website, rafemartincpa.com, or you can email me at info@rafemartinaccounting.com. And I think this would be a fun topic, again, to talk about the benefits from generating more revenue, but also to manage taxes more efficiently. But thank you for a great episode.
Absolutely. Next episode, we're going to go through the actual tax part of the equation. So y'all make sure you tune in for that.
Yes.
Have a good one. Thanks, Allison.
Thanks again.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.